All right. I greet you. Good morning, good afternoon, good evening, good evening from here. Um, I want to explain to you now how this strategy works. Please listen good and listen very attentive and follow it exactly as I say, so you don't get caught off guard or to make mistakes. All right. So this is on USD. We start from the very beginning. I drew in the other diagram, the one you sent, your screenshot, the areas I circled to show you. Now this is how it works. You see, when this market gets the stochastic get to the buy position, get to this level between level 20 and level 10, which is telling you it's the market is like oversold. Then is buy position, and then this candle closes in bullish. You have the first breakout like this. You have this first breakout here. After this first breakout, the bearish breakout, then the second bullish this second candle has to close on the bullish candle. Mostly the candle need to be a strong bullish candle, like an engulfing candle. Then when this candle closes with bullish, then this will be your entry point. Here will be your entry point. And when you enter your trade there, when you enter your trade here, when you enter your point here, then where you place your stop loss is below the previous. This is your entry below, down below this candle. Now the last close of this candle, the last week where the week is, that's when you place your stop loss. You understand? That's where you place your stop loss. This is your entry position. Now this is your entry position. You enter in this candle. After the candle closing bullish, you enter the next candle, which is here, and this is where you place your stop loss. In a previous, the bearish breakout candle, that's where you place your stop loss, and then this is where you take your profit. You take your profit here, or there's two criteria which you take profit. Either this Ashimoku hits this level 80 or 90. Between this level 80 or 90, that's where you take your profit. Or the candle hits the Bollinger Band, the upper line of the Bollinger Band, that's where you take your profit. You have to watch it. But the first, before you enter, the candle need to come very the bearish candle need to come very close to the lower Bollinger Band line and break out of it in most cases. And then to take profit is the upper line, or when your stochastic gets to level 80 or 90, that's for a buy trade, for a buy position. You understand? That is how you trade it. Now if we were to trade like that, you see now that if you this candle close, breakout and close in a bearish, the next candle and opens and close in bullish, make sure that by that time, make sure that this stochastic must have curved, turned, as in it must have made giving you a crossover sign, crossover here, and then turned up facing bullish. Turned, as in not the stochastic is not pointing downward. It's not giving you a bearish direction. It has changed direction to bullish direction. You understand? It has made an attempt. It has given you a crossover here, and then that it has turned and start pointing upward. That's where you enter. It has turned and start pointing upward, and then this candle closes, give you a bullish closes bullish. That's when you enter the next position, and then take your profits up here. You understand? Take your profit up here and then leave the market. Exactly the same thing happened here. You see, like now, if I were to trade this now, first I see here it has given me, the market is in over let's say it's in overbought position. in level above the level 80 and 90, and it has given me a crossover and it's pointing downward. And then I wait for this. It has given me a breakout, a bullish breakout. I wait for the candle to close on a bearish. Like this is a doji, this is a price action. Now for instance, this is a price action. I would have entered here, but in most cases I would like him to I would like to see a strong reaction on the opposite direction. Like now, this is a strong bearish candle. It closed strongly. Then this will I'll enter in my next position. This will I'll enter. I'll enter the trade here, and then place my stop loss here. I'll enter the trade here, and then I'll take my profit here. You understand? I'll take my profit here. Exactly. The candle touched the lower Bollinger Band, and then this stochastic also got to the lower level 20, between level 20 and 10. That's why I take my profit. If you watch closely, it happened here, here. It happened. Let me use this. It happened here. I take my profit here. Happened here, here. Take my profit up here. We have another sign, another one here. You see, it happened here. Like in the case of this now, you see this one closed, but the close, the candle, the bullish candle wasn't strong enough. That's what I'm saying, that it has to be the candle that is closing next need to be strong. It needs to give you a strong, the candle needs to be strong. How do you define strong? That the body needs to be a lot bigger than the wick. You understand? That tells you that this candle is a strong candle. The body has to be a lot bigger than the wick. These small the little lines above or beneath the candle. The main body of the candle needs to be to cover more and much areas than the little lines above or beneath the candle. So this candle was not a strong. This was not a strong bullish candle. So if me, I wouldn't take this trade. I'll wait and see for the next candle to happen. So when you get here now, you see this. See what happened here. The market got here. It's in the level 20 and 10, and it has given you a crossover here, and then we have a strong bullish candle. This would have been your entry position. Here would be your entry position, and your stop loss would be here, beneath here, and here will be your entry position. And then this here will be your this here is supposed to be your take profit. Supposed to take profit here. That is, this should be, here would have been, you have taken your profit somewhere around here. You would have still hold it to touch the upper candle, but once either your stochastic gets to the high of the direction you're buying to, or or candlestick touch the Bollinger Band of the area you're buying to, that's where you take your profit. Either of the two, whichever one touches first, that's where you take your profit, or you place a strong stop loss. Note, let's say you enter your trade here. You enter your trade here. You take your position here right now. When your stop loss is placed here, and this is where you enter your position, and then this candle close in bullish, in profit for you, please always remember to move your stop loss that is here to above, a little bit above your entry position. Always remember to move your stop loss that is below your entry position to above your entry, a little bit above your entry position, should in case the market wants to do a retest, it will not cut you off. Because this market, it normally, it's not supposed to do a retest, but if by chance that it wants to come back down, that means it would, that means the market want to do a reversal. The market is not, or doesn't want to continue, it wants to come back down, and then make sure you put your stop loss above your entry position, so that even when the market is coming back down, it won't cut you off, put you in a negative. It will just hit your stop loss, and then you close out small profit. And then second note, please, when you're entering a position, try to enter at least three positions, at least three open positions in a particular pair, in a particular trade. When your first candle closes in bullish, take out one or two positions in pushes in profit, and then put a stop loss in the remaining open position, then allow it to run. It depends on you. You can decide to take one position, close one position, and allow two positions to run with your stop loss, which that's above your entry position. Please never forget that. It's very important. So and then the second note, you see now, this Ashimoku stochastic was here, but now the candles did not touch or break out in the upper um, Bollinger Band, in this upper Bollinger Band. So this is not a good signal. It's not a good signal for to place a trade. So in this situation, you ignore it. You understand? When the two have to agree, like say like this one agree, the same, this agree here, this they agree. You understand? This one, there was no agreement. It didn't touch or break out above. So in this, you ignore. Please note, ignore. And don't note this. You see this area like this, when the MACD is changing position from facing down to facing up. If there is any position, anytime you see a setup occurring around that area, between the first two or three MACD sticks, you avoid it. Don't place a trade, because it's a transition move. The market is about to change either from downtrend to uptrend. You avoid it. All right. So let's say we see another good positions to where it worked out. Let's say see this now. This, I would have placed my trade. I would have taken this trade. Yeah, enter the next candle, take, then up here, place my stop loss and take my profits. You understand? We lose profit there, and then here again, you see we had the same thing here. Made your profit, close, and up here again, it give you up didn't, here didn't set well. Down here, gave you the same thing. Take your profit. Here, it gave you the same thing. You place your trade, come down, take your profit, and so on and so on and so on and so forth. It's just everywhere. It's just everywhere. Here you have it, here you have it, here make your profit, you have it here, make your profit, take it. It's just everywhere. You have the same thing here, we have the same thing here. Okay, this one didn't occur well. We have the same thing here. We have the same thing here. It occurs everywhere. It's we have, okay, here, we have here, and then we have where is it? No, we have this one, which is this one, which is this. Take your profit. This didn't overweight, it didn't touch it, it didn't get to, it did not get to the upper Bollinger Band, so you ignore it. All right, this now would have been a good trade here, that it will go upward. And let's see what's going to be of it tomorrow, because I said tomorrow, on Monday, this market is expected to go up. That is, if this bullish candle closes in bullish, then we should expect this market to go up a little bit, then you take your profit. But I would advise you to trade it on your demo account for about the space of um, a week or two. After trading, mastering it in your demo account, then you calculate your profit and your losses. If your profit is lower than your losses, that means you don't have to go live yet. You need to continue to study it for perfection. When you master it, when your profit becomes more than your much, when your margin becomes much, your profit margin becomes much more than your losses. That's when you are ready to go live on a to trade live on a real account. So and also make sure you inculcate or you introduce money and risk management in your tradings. That's how you really make it in trading. Don't overtrade. Use adequate lot size to trade. Don't place trades with too much lot size, high lot size. All right. So and secondly, lastly, I mean, this 5 minute time frame is more or less like scalping. You can't place a trade in 5 minutes time frame and then be doing another thing. You have to watch it. You have to be on it close. Keep a close eye on it. It's like it's scalping. You're scalping. It's like in and out, in and out. You place a trade, you wait for it, two three you wait for it 10, 15, 20 minutes, you're out. You enter a trade 10, 15, 20 minutes, you're out. 10, 15, 20, 25, 30 minutes, as the case may be, you're out. That is how you trade 5 minutes. You don't place a trade and then go and start cooking or go and start discussing with your friends or something. You watch your trade, except you want to trade on a higher time frame, that which is like let's say from 15 minutes, 30 minutes, or 1 hour time frame. That's when you can be more a bit relaxed. Those ones are intraday trading. But if you're trading this 5 minutes, that we call it scalping. You have to watch it, keep a close eye on your trades, on your market at every point in time, especially when you have an open position in place. Please be well guided. All right. If you have any question, you can always ask me anytime. I would answer. If you're not clear on it, please feel free to ask any further questions. Now, these fractals you see on top, it helps me to know where the higher highs are and the lower low is. Fractals, the arrow on top of the candles. It helps me to, or top or below the candles, help me to know the higher highs and the higher lows. Help me know when the market is going up or when the market is coming down, as in the trend, and to know where the levels are, the resistance and the support levels. It helps me to understand where they are. Like if you see this candle now, you see these candles are, this one is below this one is below the upper one, this one is below. As I help me to know, tell me that this is a lower trend, this is a downtrend. You understand? And this is a lower low, as it helps to know the um the market direction, and also help me to know when the market has gone, is about to reverse as well. In a long run, it helps to know when the market is about to reverse. But if I see this candle, when this candle open, I see an arrow beneath this candle. It helps me to, it gives me a little bit of confidence that yes, this market has it's going on a different direction because of the fractals that appeared below or above the candle. And so the MACD, the MACD, it helps me to avoid placing trades in a wrong. It helped me to not to place wrong trades, take wrong position. Like here now, you see that this MACD went up and then changed from pointing downward, start pointing upward. So this transition period, it's it can cut you, can put you, throw you off, put you in a wrong position, wrong side of the market. If you follow this stochastic now to place a trade here, you would get it wrong. So that's why I have kind of avoid it most times. But if I'm going to trade it, some in rare cases it does work. Even when it happens, like the market will still come down, but I try to avoid it. If I have to trade it, I need to use a very tight stop loss to trade it to avoid giving me putting me on a deep negative. It's not it's not what we want for trading. So the video is getting too long. I have to stop it here. Then if you have any question, just ask me and I'll explain to you. All right. Thank you.